Good morning, everyone. Glad to have you guys to the show. Today is Wednesday, April 17th, 2019. And, I want to talk about China for a couple minutes before we move on to the markets. And the first thing I want to talk about is what's happening in China. China, is undergoing a record slowdown in their economy. They've done another injection of their stimulating, and we're going to take a look at the results real quick. Let's get the charts open right here and see what's going on with China. This is the Shanghai Composite Index. This is the stock market in China, basically a way of saying the stock market in China. And, we can see this input of stimulus. Now, we can see the effect in the Shanghai Composite. Here's the thing. This chart I'm looking at, by the way, is over the last few months, 3 months. This is a 3-month chart of the Shanghai Composite, or the Shanghai stock market. Now, we can see it raises the stimulus, raises the stock market, but it also has a profound effect upon the Chinese bond market. Let's take a look at the Chinese bonds. We'll close in here a little bit. Look at the 10-year yield in the Chinese bonds going straight up. Okay, it started out with when the stimulus started, the yields were dropping on the bonds down to 3.1%, and now they're at 3.43 and climbing fast on the Chinese 10-year bond. Now, the Chinese, because of the slowdown, had to go into the stimulus measures. We're going to see these same stimulus measures here in the United States, and we can expect to see the same sort of effects on the markets, exact same sort of effects. Quantitative easing 4 is what our stimulus is called. So that's what we're heading toward. We're barreling headfirst at quantitative easing 4. And what's the effect probably going to be on our 10-year bond? Probably very similar. It's probably going to shoot up, when the stimulus hits. And it's probably going to have a similar effect on our stock market. So what could trigger a quantitative easing 4 is if we get a decline in our stock market, the Dow Jones, a sufficient decline. Now, what is the Dow Jones doing right now? Let's take a look at the Dow Jones. We've been through this enormous rally, and it's rallied up right now to 26,451. Just give me a second. The stock market has just opened up. Let me refresh the page. It's down 10 points on the day. What we can see is if we go back, instead of looking at it in this more long-term chart, let's look at it over a month period. No, let's try 3 months. Over the last 3 months, what we see is we see very little movement upwards. We go back out to February 20th, and what we see is we were 25,954. We've only climbed just a few hundred points since then till now. I mean, we really haven't, there's been not a sufficient, it's almost been going sideways, as you can see here, looking at going back to February. It's been almost going sideways, the market. And this is in this so-called rally, been almost going sideways. It's be very easy now for this to tip and go down, this market right now at this point, Of course, if it does, if we get a trigger downwards, it could create more momentum, and this whole thing could lead to this next stimulus coming in. These next stimulus measures. It could push it into effect much faster if the market takes a turn out of bed. Then quantitative easing 4 is going to look much, much more likely. As long as the market's staying up like this, of course, it's only talk about quantitative easing 4. And really, the Fed is still removing $50 billion a month from our economy. They'll change. With quantitative easing, of course, that's a complete 180-degree shift in the opposite direction from this tightening that they're still doing. They're actually still doing the tightening. So we got to keep our eye on that. We can see the effects of China, and we can see those effects will translate to our economy as well of stimulus. China's in stimulus right now. Now, the Chinese central bank has done so much stimulus over the years, and they've built up such an enormous bubble in all of this that now they're trying to say, okay, we're going to cut back. We're going to cut back. Now if they see their 10-year bond shooting through the roof, they're saying, okay, we're going to cut back on this. But the net effect, they're in a trap, because the net effect of them cutting back on the stimulus, and also take into consideration that the Chinese stimulus now is pushing on a string and it is basically not going anywhere. It's going into a liquidity trap. So they're caught in the same problem that we're caught in, and our problem, though, could get much worse very much sooner, you know. So the Dow's down 25 points on the day. Let's take a look at the silver price now. And what we see is, it shot up this morning earlier. It's still up 2 cents, but now it's dropped back down below $15 again. You know, it was up to like 15.07 a few minutes ago when I checked. You know, now it's 14.99. Let's take a look at gold on the live chart today. 12.75. It's down $1.40 on the day. Gold's taken a little bit. Gold isn't recovered to any. Silver started to recover. Gold's flatlining down there at 12.75.10 for the day. Let's take a look at cryptocurrencies now. Take a look at Bitcoin. You know, Bitcoin is staying strong above $5,000. It's $5,177. It's staying so strong, it's starting to look to me like that this upswing we had, or this uptick in price we had. Let me go out to the 30-minute here. We take a look. It's starting to look to me like this uptick in price we had. We were down to 3,000s, and we had this uptick, and it went up to over $5,000. It's starting to look to me like this is here to stay. Every day we go into this, and I see it staying up above $5,000. I'm thinking to myself, hey, you know what? It's getting more secure in my mind that every day that passes, that we're probably not going to test the lows anymore. We're perhaps pulling out of this doldrums that Bitcoin's been in for a long time, you know, and every day I see it go by. So yesterday I went in and bought a few Bitcoin. Not a few Bitcoin, I mean to say a few percentage points of one Bitcoin. A few Bitcoin. Like I could buy a few Bitcoins. That would be nice. A dream on. I bought a few percentage points of a Bitcoin, and I actually went against my advice. I tell all you guys out there, I say, do not buy more Bitcoin than you can afford, money that you can afford to lose. I actually spent a little bit more money than I can afford to lose, you know. And anyway, but I feel fairly confident now at this point. But that's just me. It's not financial advice. That's just what I'm doing, you know. It's just telling you what I'm doing. Anyway, let's take a look now at the Bitcoin market capitals. $177 billion market cap at 52.3% Bitcoin dominance. And what am I on here? I'm not on the right place. Here we go. 52.3% Bitcoin dominance. And what we're seeing here is we're seeing Litecoin is at $80.98. So it's cracked above $80 again. You know, EOS is 552. You know, that's looking good for EOS. EOS has been creeping up there. Bitcoin Cash 315. So is Bitcoin Cash, been creeping up. XRP 32 cents. 32.5 cents. 167 for Ethereum. Binance Coin is $19.72. Stellar is 11.5 cents, and Cardano is 8.3 cents, and Tron is 2.6 cents. I like to stay away from the coins that are measured in cents. You know, I like to stick with the coins. I like to stick with the top coins. I don't like to go down too much down, say below Dash here. Dash is probably the limit of how far. Number 13 is probably the limit of how far I'm willing to go. You know, off of these coins that are in the top 10. You know, but I do like Dash. And the reason why I like Dash is because of their Evolution wallet that they have, coming out. I'm not sure exactly how good that Evolution wallet's going to be, but it's a lot of promise to it, Monero, I do like Monero too for its security features with Monero. But Dash is pretty secure too. But I like to stay in these top coins. Anyway, let's move on. We already took a look at the Dow. Let me refresh the page one more time. She's down 51 points on the day so far. She's dropping today. Let's take a look at oil. Oil is at $64.38, and it's been slowly rising up from its bottom, and it's still rising so far. Anyway, I'm going to tell you what. These oil prices start to drop again. Watch out. The Canadian dollar is going to be getting in huge problems if that happens. As long as these oil prices stay up, so will the Canadian dollar. Oil prices start to drop. Watch the floor drop out from underneath the Canadian dollar. And this would mean higher food prices and stuff here in Canada, and we would start to see some serious inflation if that happens. I could see the dollar dropping as low as 68, 67 even, if oil prices start to drop again. Let's take a look now at U.S. Treasuries. We're seeing the long bond here is up 1 percentage point, but we're seeing a fall in a little bit through the 2-year, 3-year, 5-year, and 7-year. So we're looking at 2.43 on the 1 month, 2.44 on the U.S. 3 month, 2.46 on the U.S. 6 month, 2.45 on the U.S. 1 year, 2.41 on the 2 year, 2.38 on the 3 year, 2.4 on the 5 year, 2.5 on the 7 year, 2.59 on the 10 year, and 2.99 on the 30 year. Those are your treasuries. Now let's take a look at the U.S. dollar today. The dollar's at 96.96. And it's trending upwards this afternoon, just a little bit. Well, it's not afternoon yet, it's still morning. But that's the show for today, guys. Thank you guys for listening. Like and subscribe. And listen, give me a thumbs up. And we'll catch you guys in the next episode. Bye-bye, guys.